Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Will Fraser-Allen from Albion Capital to talk about the Albion VCTs. Hello, Will. Welcome back to the studio.
Jonathan, it's great to be here. Thank you very much for inviting me back.
So we're here to talk about the VCTs. What do they aim to do for investors?
Well, the Albion VCTs are a great way for retail investors to get exposure to venture capital and some of the most exciting growing companies in the UK. And we do that through our three VCTs and have done that for the best part of 3 decades.
And for those who aren't familiar, Albion Capital or Albion VC, who are Albion Capital and what's your role there, Will?
So I sit as managing partner and I head up a team of 50, of which nearly 30 are investors. And we've been doing investing in this space since 1996. So we were there right at the beginning. And it's all about us finding the very best founders and backing them and helping them to be successful and create value both for our investors, but also for the UK economy more broadly.
And your team looks after the VCTs, but there's also a few other mandates in there. In total, how much are you managing? And
Absolutely. So we in total manage just over $1 billion of assets, and approximately 700 million is in VCTs. And as you say, we've got various other investment strategies that are aimed at institutional investors.
And so, turning back to the VCTs, what sort of companies are you looking to back?
So we are ultimately looking for the very best founders, but we do focus on some specific sectors where we see long-term value being created. And if I sort of break those down into the 3 key targets, that should be helpful to our viewers today. So probably the biggest area is B2B software. And within that, we narrow that down to areas such as digital security. We look at climate tech. We look at data and AI. The second prong is healthcare, but health tech being the main theme within healthcare. And then finally, we have a growing exposure to deep tech. And by that, I mean both physical and computer sciences, but it's importantly looking to solve some of the world's biggest problems through the creation of world-class IP in the UK.
And in terms of stage of company, what sort of revenues are these companies generating when you back them?
So when we back them, they typically have low revenues, and that's absolutely what we're meant to be doing. So we are effectively creating the acorns that will grow into mighty oaks. So the way to maximise value when you're investing in the space of venture is to get in at the ground floor and make sure you are backing the best founders. But what is also very important is that you back those businesses over time as they get bigger. So the actual exposure to early stage is limited to a relatively small number of companies. But if you look at the portfolio more generally, you're getting exposure to a whole range of maturities, right up to some really quite large software businesses now.
And there's been some recent rule changes on VCTs. Does that mean maybe your investment universe has expanded probably quite a lot, actually? How are you seeing the recent rule changes? I guess there was a stinging in the tail in the details, but
yeah. So you're referring to the recent budget, which, as you say, very helpfully did make some changes to the scheme that we had been long calling for, and specifically that was around expanding some of the limits we operate, how much we can put into a company over time, how much we can put in each year. And why is this important? It's because it allows us to back our best companies for longer, so they continue to qualify for our investment. But it also increases the investment universe in terms of the types of companies we can now back. So actually really helpful. And for our strategy, which is all about backing those winners till they become very significant, to be able to invest in additional rounds of funding is really important. The sting in the tail that you referred to was that they reduced the upfront tax relief from 30% to 20%. Clearly, one would prefer it at 30%, but equally well, the real value in what we do is the long-term creation of value and also the fact that we're able to deliver all our returns tax-free. So actually, when you, as a long-term investor, and I would encourage anybody looking at Albion VCTs to see it as very much a long-term investment, actually the importance of that 10% going in becomes less important, and what's far more important is the capital growth we create and the fact that we can pay out tax-free dividends.
That's a very good point. And so turning to the companies that you're looking to back, do you have any recent examples of companies you backed?
Yes, I'm going to talk about three. I'm going to touch on one that's in the portfolio, if I may, just to show you what the opportunity is, and then I'll move on to two new ones. So Quantexa is the largest company in our portfolio. We've been invested in it for a decade or so, and what it does is it's all about identity resolution in large data sets. So it's used by particularly by big global banks to detect financial crime, but its applications far wider than that. That's a business that we've been backing for many years. We've put in several rounds of funding. It now has unicorn status. So it's been valued at just under £2 billion sterling. It's been backed by some of the most important and influential investors in the world, and it is a real success story for the UK. And we're delighted that the VCTs provide us the opportunity to continue to be invested, and for our shareholders to benefit from that growth, because that's what venture is all about. It's making sure you capture the value of the big ones. But it's also about the new companies that come in at the bottom of those acorns that become the oaks. And I'll just talk about two that we've done. One was early stage called OpenTrade, and there we're investing with some very influential investors and some very well-known tech investors. It's all the area of crypto assets. So it's allowing companies that are operating in the stablecoin space to provide yield. So people are able to have investments in stablecoin, but also to be rewarded for holding it through a yield product, and that's growing very, very rapidly. Evaro was another business we've backed. So this is in the healthcare space. So their whole reason for being is how do we make healthcare more accessible, and how do we use digital channels to do that. So it's centered around the ability to prescribe out of pharmacies, and as pharmacists get more access to the areas that they're able to prescribe, this is providing the ability to do that in a digital way, and we're seeing very high growth in that space, which is clearly a good way of making healthcare more efficient in the UK.
So how do you source some of these deals? So looking at OpenTrade, that looks like a really competitive round. I think some of the world's best crypto investors are in that round. How do you muscle in and win a deal like that, Will?
I think the simple answer is about having the credibility that makes founders want to partner with Albion, and that really speaks to the team that I'm very, very fortunate to lead. We've got some extremely capable experts in this field. So fintech is one of our key pillars within B2B software, and we've built up that credibility through what we have done historically, and the way that we talk about it currently. That does mean that these founders see Albion as a partner to sit along some of these well-known investors. But importantly, the VCTs are providing additional capital in a very effective way within the UK.
That's a very good point. And so turning to exits, Will, have you had many exits in the portfolio recently? Any you can talk about?
Yeah, so I mean the last big exit was Egress, which was a email encryption software business that we backed back in 2014, and that was a really good example of one of the top 3 companies in our portfolio then going on and selling. Delivered over a 7 times return, but importantly, it delivered over 60 million of proceeds back to our VCTs, and that's the opportunity as these large, what we call outliers, companies that have become very significant, can then generate some very significant returns. And then what we're working on currently is a project where we are looking to make a number of exits elsewhere within the portfolio, because it's a very important part of what we do is to show a healthy portfolio is a regular stream of exits.
And so turning to risks, Will, I guess you were touching on one there, and that if you have a number of successes within the portfolio becomes a little bit more concentrated. But what would you say are the key risks within your VCT?
Yeah, so portfolio concentration is clearly a risk, but that is something that we all need to be comfortable with, including our investors, because that's what venture is all about. If you don't back those businesses and grow and enjoy their growth, you don't get the top quartile performance. So I think that's a key point, but we manage that by having a broad portfolio. So there's about 70 companies within the 3 VCTs. And then we also think about how we diversify across stage. So we talked about the very early stage businesses. Those businesses then grow, become somewhat larger, and exit. So we're sort of managing risks through a broad range of maturity and sector focus. But the key is we are looking to grow some really quite exciting businesses, and if you do that consistently over decades, you build up that range of potential opportunity.
So summing up everything we've discussed, Will, for those who are looking to back a VCT this year, why should they be backing the Albion VCTs?
I think it's track record. So over the last 10 years, we've delivered an average return of 6.9%. That is ignoring any tax relief. So upfront tax relief and benefit. And that speaks to my earlier point that the returns from VCT are all about the ongoing returns. Those are tax-free. Those are net to the investor. And what they're designed to do is to cover our target, which is to deliver a 5% annual yield, so 5% of NAV. So I think track record is definitely something people should be thinking about. But I'd also sort of remind everybody of what I've said so far, which is all about our specialist sector knowledge, our focus, and very much the Albion team. You've got a team there that are able to deliver high-end returns because we've really invested in having the right people at the right place to be able to benefit from some of the very exciting companies that are coming through in the UK.
Will Fraser-Allen of Albion Capital, thank you very much.
Jonathan, thank you very much for an enjoyable chat.
If you're watching on YouTube, please press like and subscribe to the channel for more.